In August 2025, something unfolded in Switzerland that left even the smartest financial experts scratching their heads. A tiny but incredibly clever European country made a move that could reshape the future of money itself, the US dollar, and maybe every major currency in the world. Now, Switzerland's logic is simple. When the financial system starts shaking, don't hold on to paper promises. Hold on to something real, something with true value. And for them, that's gold. But here's where the story gets even more interesting. That very same week, across the Atlantic, the United States made a completely opposite move. Washington quietly tweaked the rules on gold capital gains tax. In plain language, if you sell gold and make a profit, Uncle Sam will now take a bigger cut. Why? Analysts say it's no accident. The US doesn't want people piling into gold. They want investors sticking with dollar-based assets because that's what keeps the dollar strong. So picture this. Switzerland is sprinting toward gold, while America is trying to make gold harder to touch. Two very different strategies, but together they mark the opening shots of a new global currency war. And then the bombshell. A confidential US Customs and Border Protection document leaked. It revealed that America was about to slap a massive 39% tariff on Swiss gold bars, the 1 kilogram and 100-ounce ones that, until now, had always entered the US tax-free, 0 to 39% overnight. The reaction? Chaos. Gold futures exploded, shooting up to a record $3,500 an ounce. Traders froze. Investors panicked. Even central banks were stunned. On trading floors, screens lit up like rocket launchers, prices shooting upward in real time. Meanwhile, in newsrooms, phones rang off the hook. Everyone had the same question. What on earth just happened? And here's where it gets even more fascinating. Why is Switzerland so central to this? Because believe it or not, more than 2/3 of the entire world's gold bullion passes through just 4 tiny regions, and all 4 of them are in Switzerland. These cantons, as they're called, host the world's most advanced and secure refineries. These aren't just factories melting down gold. They turn it into something so pure, so flawless, that central banks can lock it away as official reserves. In fact, much of America's own gold reserves, yes, the very symbol of US financial power, has been refined in Switzerland. Which means, if for any reason those refineries shut down or their supply chains got disrupted, it wouldn't just be Switzerland's problem. It could shake the foundations of global financial security itself. And for the United States, it would be nothing short of a nightmare. But here's the thing. This battle isn't just about gold bars sitting in vaults. Switzerland's entire economy is built around a gold ecosystem so vast and so interconnected that countless other high-value industries depend on it. We're talking about pharmaceuticals, luxury watches, and even precision micromachinery. If the gold trade stumbles, it won't just shake banks or trading floors. The ripples will spread to medicine, to luxury goods, to technology itself. In Switzerland, gold isn't just another commodity. It's the backbone of the entire trade network. Banks, insurance companies, transport systems, even cutting-edge research labs, they all plug into this golden supply chain. And that's exactly why big powers, whether in the West or in Asia, think 100 times before touching Swiss gold refining. It's not just business, it's leverage. And remember, gold isn't only for rings and necklaces. It runs through the veins of modern technology. It's in circuit boards, medical equipment, even satellite systems orbiting above our heads. Which means, if the gold market wobbles, entire sectors, from healthcare to defense, could feel the aftershocks. Now, just as markets were spiraling, politics entered the scene. Days later, Donald Trump took to his social media platform and declared there will be no tariffs on gold. And instantly, the markets breathed a little. Gold futures dropped about 2.4%. Spot gold slipped around 1.2%. But was that the end? Not even close. Because the real game was just getting started. You see, for years now, countries have been quietly asking the United States to give back their gold reserves. The biggest example? Germany. It openly declared that it wanted to repatriate a huge portion of its gold held at the US Federal Reserve. After that, the Netherlands, Austria, Turkey, even Venezuela joined the line, pulling their reserves out of America's vaults. And these moves aren't for show. They're strategic. By taking their gold back, countries reduce their dependency on the dollar and tighten their grip over their own wealth. It's about control, security, and independence. But again, the story doesn't stop there. Washington isn't just playing hardball with gold. It's also targeting Switzerland's other crown jewels, its luxury, watch industry, and its powerful pharma sector. Both are already facing 39% tariffs as the US looks to squeeze every bit of advantage out of trade. Now let's turn to India's angle. India happens to be the world's second largest consumer of gold, which means if international gold premiums rise, the ripple hits India straight in the heart. Jewelry prices spike, wedding season budgets explode, and even gold loan interest rates climb. That's exactly why, at platforms like BRICS, India, alongside China, Russia, Brazil, and South Africa, is pushing for a different future, a gold-backed trading system, one that pulls the plug on dollar dominance and rewrites the rules of global trade. If Switzerland keeps piling gold into its reserves, it won't just be about safety. It could supercharge BRICS and directly challenge the US dollar's dominance. Imagine a world where trade shifts from dollars to gold. America's grip on global finance would loosen overnight. And this isn't just a tug-of-war between Washington and Zurich. It's a warning to the world. The balance of economic power is tilting. If tomorrow these tariff battles spill into China, India, or the UAE, it won't just be gold at stake. Oil, gas, even food prices could soar, and ordinary people everywhere would feel it in their daily lives. Markets today are moving faster than policies can keep up. What happens in boardrooms and parliaments now hits your savings, your loans, even your grocery bills. And if this tariff game continues, gold could stay permanently expensive, slipping further out of reach for everyday buyers. So, Switzerland's gold rush isn't just a financial decision. It's a move that could shake the entire global order. Because in this game, gold isn't just a metal, it's power. And the next chapters of this story are only going to get louder. And that's where we'll leave it for today. If you found this story eye-opening, make sure to stay tuned, because the next chapters in this gold battle are going to be even bigger. Thanks for watching, and I'll see you in the next one.